Welcome to the Deep Dive. Today, we're digging into the first quarter 2025 earnings call from Full Truck Alliance, FTA.
That's right.
Our goal here is pretty straightforward. Unpack the key results, the trends, financials, what management's saying about the future.
Basically give you the core takeaways so you get a clear picture of FTA's recent performance and where they might be heading. Fast.
Exactly. All right, let's dive straight in with the headline numbers for Q1 2025. They reported total net revenues of RMB 2.7 billion.
Yeah, and that's up 19.0% compared to the same time last year. Pretty solid top-line growth.
And the bottom line, that non-GAAP adjusted net income figure really caught my eye.
Oh, absolutely. RMB 1.3914 billion. I mean, that's a jump of 84% year over year. Really significant profit growth.
Wow, 84%. Okay. And that seems built on some serious operational momentum too, right? Fulfilled orders.
Yeah, total fulfilled orders hit 48.2 million. That's up 22.6% year over year.
And the users, the shippers.
Also growing strongly. Average shipper MAU monthly active users reached 2.76 million for the quarter.
That's up, what, almost 29%?
28.8% year over year, yeah. And they mentioned it even topped 3 million in March specifically.
Okay. So, big picture, it sounds like they're firing on, well, multiple cylinders.
Yeah.
Growing the operation and getting much better at turning that into actual profit.
Exactly. Expanding scale and improving financial efficiency seem to be the key themes here.
Let's dig into the operations a bit more. That 22.6% growth in fulfilled orders, they made a point of saying that was faster than the overall freight market.
Right, which implies they're taking share. Management pointed to a few things driving this. First, growing what they call their high-quality user base.
These are the direct shippers, small and medium businesses.
Primarily, yes. Users who tend to post, more reliable and consistent orders. Second, they mentioned effective execution of their operational strategies, just getting better at running the platform.
And new business lines playing a role too.
Definitely. They highlighted breakthroughs in areas like LTL, less than truckload, and also intracity freight. They seem particularly bullish on LTL as a future driver.
Got it. So back to the shippers, 2.76 million average MAU. Over 1.1 million total members. Acquiring those direct SMEs sounds like a core focus.
It really does. They see them as the source of that high-quality order demand. They talked about a 3-step strategy to get them on board, ensure their shipments get fulfilled, and keep them using the platform.
Shipment onboarding, fulfillment assurance, retention enhancement. Sounds logical.
Yeah, and they combine that with membership programs. It seems to be working too. They mentioned their 12-month rolling retention rate for shipper members is still above 80%.
Over 80% is sticky. Okay, what about the truckers? The supply side.
Still very active. Average monthly active truckers stayed above 3 million. That's high single-digit growth.
And what's keeping them engaged? Just more orders.
That's a big part of it, yeah. More shipper orders means more work opportunities, but they also credited improvements to their matching algorithms.
Making it easier for truckers to find the right load quickly.
Exactly. Reducing idle time. They said metrics like empty hauling and waiting time were down year over year and actually lower than the industry average. So truckers are spending more time earning.
Makes sense. Less wasted time, more money in their pocket.
Precisely. And their trucker membership, the Shining program, seems quite effective. Over 700,000 members now.
And these members are more active.
Yeah, they contribute around 40% of the long-haul orders and apparently have higher transaction frequency and fulfillment rates. So a valuable segment.
Okay. And the overall trucker supply is stable.
Management thinks so. They mentioned the relatively high entry barriers into trucking keep the supply fairly steady, and the platform helps these truckers improve their utilization and income, which obviously helps keep them on the platform.
Right. Now, one metric that really stood out operationally was the fulfillment rate. Record high.
Yeah, 39.2% in Q1. That's up almost 6 percentage points from last year. A significant jump.
What's driving that improvement?
A few key things. One is that user structure optimization we touched on. Direct shippers now make up 51% of orders.
And they fulfill at a higher rate.
Much higher, around 60% apparently. That's way better than intermediaries. So just shifting the user mix helps lift the average.
Okay, so that's a structural lift. What else?
Refined operational strategies. Things like clarifying pricing to cut down on cancellations, and optimizing how truckers accept orders to boost their online time and improve matching precision.
Just smoothing out the process, reducing friction points.
Exactly. And the third piece was enhanced matching efficiency overall. The average time from posting an order to getting it matched successfully dropped to under 10 minutes.
Under 10 minutes, wow.
Yeah, that's a 35% plus improvement compared to last year. Faster matching directly helps boost that fulfillment rate.
It all connects. Okay, let's pivot to the financials. Revenue growth was strong, but transaction service revenue was really the star, right?
Absolutely. Grew 51.5% year over year to RMB 1.0465 billion. That's almost 39% of their total revenue now.
And that growth came from both more orders and making more per order.
Correct. You see it in the monetization metrics. The monetized order penetration rate, basically the percentage of orders they actually make money on, shot up to 85.2%.
Up from 77.4% last year. That's a big leap.
It is. And on top of that, the average monetization amount per order also increased. It went up about 12% year over year to RMB 25.5 per order.
So monetizing more orders and making more on each one, how are they achieving that?
Well, they rolled out their commission services in 39 more cities, and they plan to keep expanding that. They're also moving to what they call an order-based exemption model.
Meaning?
Instead of commission rules varying maybe city by city, it sounds like it'll be more tailored to the specific order itself, more refined, potentially more consistent.
Okay. And they mentioned something about truckers being more open to commissions now.
Yeah, an interesting point. They suggested that because freight pricing has improved and the platform offers better protections for truckers, the truckers are actually more willing to accept these commissions. They see it as a kind of mutually beneficial cycle.
Interesting dynamic. Okay, let's talk costs. Cost of revenues dropped significantly. What was behind that?
Yeah, down 32.3%. The main driver was related to VAT value-added tax. Lower VAT costs, net of government grants they get for freight brokerage. They actually proactively downsized some of that brokerage business, anticipating potential changes in how those VAT rebates work.
Ah, so a strategic move anticipating tax policy shifts, which lowered that cost line. And other costs.
G&A and R&D were down, mostly due to lower salary costs. Sales and marketing was up, though, as they spent more on user acquisition.
Right. So strong transaction revenue, better monetization, careful cost management, including that VAT piece.
Yeah.
It all flowed through to that massive profit jump we saw.
Exactly. Income from operations up over 285%, net income up 118%, and that non-GAAP adjusted net income up 84%.
Which led to a big jump in non-GAAP adjusted EPS, too. RMB 1.32 versus RMB 0.72 last year.
A direct benefit showing up for shareholders, yes.
And their cash position looks solid.
Very solid. Ended the quarter with RMB 29.3 billion in cash and equivalents. And for Q2, they're guiding for revenue between RMB 3.06 billion and 3.12 billion.
Which translates to about, 10.6% to 12.9% year-over-year growth?
Correct. So still projecting growth, though maybe moderating slightly from Q1's pace.
Okay. Beyond the core numbers, they spent quite a bit of time talking about future strategy, especially AI and autonomous driving. They approved a big investment in Plus PRC. Remind us what that is.
Plus, PRC is focused on autonomous driving tech, specifically for the freight industry in China. This new USD 125 million early investment isn't exactly new cash in, it's converting some previous debt-like instruments, convertible notes, into equity.
And the significance is?
It's expected to give FTA control of Plus PRC's board, so they'll essentially be taking a controlling stake and will start consolidating Plus PRC's financials into their own results.
So really integrating this autonomous tech company, why make such a big bet on autonomous driving now?
Management sees it as a pivotal moment. They believe autonomous freight tech is moving past just testing and heading towards real commercialization, especially for long-haul routes.
And they want to be ahead of the curve.
Exactly. Build a whole ecosystem from R&D right through to monetization, get that first mover advantage. They mention joint R&D with truck manufacturers, OEMs.
And actually deploying trucks already.
Yes, an intelligent trucking fleet that's apparently already hauling freight for enterprise clients, so they're getting real-world data, not just doing lab work.
That's key. Focusing on practical stuff like fuel efficiency, driver fatigue.
Right. They emphasize Plus PRC is about scalable, real-world solutions, not just pure research.
Okay, and besides autonomous trucks, what about AI on their existing platform?
They highlighted their intelligent dispatching system. It uses an AI large model trained specifically for freight, powers their smart truck finder feature.
And how does that help users day to day?
It automates a lot of the communication, Can talk to multiple truckers 24/7, check vehicle status, recommend the best matches. They say it significantly improves efficiency. It's a big part of getting that matching time down under 10 minutes.
So AI is already making the core platform smarter and faster?
Definitely. And they plan to invest a lot more in AI going forward, looking at using it for order posting, customer service, route planning, basically embedding it deeper to drive more efficiency gains.
Okay, so quite a quarter. Strong operational execution driving impressive financial results, coupled with these really significant strategic bets on AI and autonomous tech for the long haul.
Yeah, it paints a picture of a company optimizing its current operations while also making some bold moves to shape its future and potentially the future of the industry.
Okay, before we wrap up, just a reminder, this is not financial advice. The information discussed here is purely for informational purposes. Investing always involves risk, so please consult with a qualified financial advisor before making any decisions.
Absolutely crucial.
So, thinking about all this, you've got FTA rapidly growing by optimizing this huge platform connecting millions of shippers and truckers, and now they're aggressively integrating AI and investing heavily in autonomous driving tech via plus PRC. It really makes you think.
Yeah.
What could this convergence, this blend of massive scale platform optimization and cutting edge autonomous tech actually mean for the whole structure of the road freight industry? Not just in China, but maybe globally down the line.
That's a big question. Definitely something to mull over.